A tactician, like a tactical person, has a different skill set than a strategic person. And that's the difference. A bookkeeper is more of the administrative, tactical person who actually gets the work done. And then the CFO is the one who can answer those big picture strategic questions. And so that's really the difference. Welcome to Profit and Prosper, a podcast for entrepreneurs who are ready to make some money while doing what they love. On this podcast, we're going to pull back the curtain and talk about all things business and money. But I promise you, this is not your typical boring numbers talk. I'm your host, Sarah Young, a CPA and CFO with over a decade of experience in finance, business, and leadership. I'm going to share everything I've learned from helping my clients grow more profitable businesses and keep more of what they earn while growing my own successful business along the way. You'll feel empowered and confident that you too can grow your wealth, live a rich life, and have an impact. Stick with me and you might even start to think that finance is fun. Let's dive in. Welcome back, y'all, to this week's episode. I'm excited for this one because we are going to do a case study of a real-life client that I have been working with over the last couple of weeks. And I've done a few case studies on Instagram in my stories, and it seems like people really like to see behind the scenes of real-life businesses. And so I'm going to test this out on the podcast and see, if we can, in the course of an episode, kind of dive deeper into some of the things that I want to talk about. So this case study is all about why it's important to know your numbers and how you can easily, as a business owner, know your numbers quickly without having to, open up a huge spreadsheet and look at 1,000 accounts, 1,000 numbers on the page. So we are going to cover a case study of a high six-figure revenue client that I have been working with over the last couple of weeks, where they are offering a high-ticket premium luxury service, but are not profitable. And the business owner could not see why they were not profitable. And so we'll talk about how I help them to understand why. And as we walk through this case study, it will become apparent to you why it's important to have good financial reports that you look at every month or more frequently, rather than, getting them months after the fact or only looking at them when it's tax time. We will go through 2 questions that I ask to help get clear on reporting and what you need to see in your reports. And I'll tell you how I reorganize this client's financials in order to help them very quickly see if they're on track or off track to their goals. Before I start with the case study, I realized as I was going through with this client that providing good reporting and being able to know your numbers is not a skill that necessarily comes naturally to people, to a lot of business owners. And it's one of those things, I'm sure this has happened to you in your business, where whatever it is that you do just comes so naturally to you that you don't even think about it, right? You don't even realize this is something that I'm good at that other people struggle with. And reporting in this case is my thing. So my background is in financial reporting. I worked at Deloitte for 4 years, just shy of 4 years. I worked at a large public company for about 4 years. And for most of that time, at Deloitte, I worked on financial reports. We audited them. And at the big corporation I was at, I started in financial reporting. I went to accounting. I went back as the director of reporting and then senior director of accounting with reporting oversight. And we were constantly working on not just reporting for SEC purposes, which you can imagine is pretty extensive, but also reporting for internal business owners and the CFO who, if you've ever worked with any of these types of people in a past life in your job, you probably can imagine they don't want to have to dig in and find the answers. They want the answers presented to them quickly so they can open their email, open a PDF, they see it, okay, they move on, right? They make their decisions. And ultimately, that's what I think business owners need to be able to do. So when I think about a successful business owner, like someone who has grown a successful business, this is something that they have, right? They are able to know their numbers and they know what their goals are and whether they are on or off track to achieving those goals. It is not difficult for them to dig through and find those answers, right? Like, I think this is a key thing to help people be successful now. I have a newer CFO client who does make multiple seven figures in revenue, and they don't have that. And that's what we are working on. It's like something that is taking us a long time, honestly, to put in place because they have so much to untangle at that size. It's possible to get to that level without having good reporting, but I think that having good reporting will shorten your process because it will enable you to quickly see what's working and what's not so that you can make quick decisions to improve your business. Let's dive into the case study. So I'll give you a quick overview of this client. This was actually a cash flow intensive client. And the intensive is sort of like a VIP day style service that I offer. I only have, limited spaces for these. But basically what I do with a client is I get all their information from them on their business, and I do a pretty in-depth assessment of their historical financials to tell them, why are you profitable or why are you not? What's going on? We assess their financial systems and say, you need to go and fix X, Y, Z to make it, easier for you to make money and manage your money. And then we help them with goal setting, financial goal setting, planning. This particular client, we talked a lot about growing their business to be able to open a second location versus selling their business down the road, and what that would need to look like and what their profit goal needed to be to make the selling of the business work, but also be able to contribute to their retirement accounts over time. And so that really is the intensive. So this was an intensive client. They did about $650K in revenue per year. They offered a premium luxury product. This was a spa. I don't know if I said that, a spa, but were not profitable. And the business owner was like, I don't know why. They had a bookkeeper, they have a tax person, but no one was really providing them with good reports to help them understand why they were not profitable. So I ask for, give me a download, give me all of your financials for the last, 12 to 24 months. Give me an export of all of your sales details. I want to see your payroll details, your team structure, tell me how your processes work. And as soon as I opened their P&L, and they are using QuickBooks and they do have a bookkeeper, I could instantly see why they were not clear on whether or not they were profitable. Because when I opened up their P&L, the profit and loss, they had, over the course of 12 months, over 135 accounts in the chart of accounts. And so the chart of accounts is just the list of accounts that you use to categorize your transactions. And I don't know, just for reference, 135 accounts, when I opened it up, I was scrolling, paging down on my Excel spreadsheet with page after page of accounts. And when you have that many accounts, what that tells me is you or your bookkeeper are not clear on what your reporting needs are. And so what I needed to do in this case was help them to get clear on what their reporting needs are so that we can restructure the chart of accounts and then provide reports that are actually helpful. So I'm going to tell you why these 135 plus accounts were a mess. Number one, their sales were not bucketed appropriately. So this is actually so common. Probably 95% of the financials that I see from clients, ranging from brand new business owners to multiple high seven-figure clients, they do not break out their sales. And it's crazy to me because your sales are the most important thing. It's honestly, don't you want the detail on your sales readily available to you? So in this case, they got payments from a couple of different payment channels. So as an example, a payment channel is like Stripe versus Square versus PayPal, right? Their sales were like total Stripe, total Square, total PayPal. And I looked at that and I was like, I don't care how much you're processing in PayPal versus Stripe, right? I don't care. That doesn't tell me anything about whether your business is successful. In this case, because they're a spa, I wanted to know what are the major things they're selling, right? Their cost of sales was also not correct. So they didn't have the correct accounts in their cost of sales. And not everybody has a cost of sales, but in this case, they're a spa, so they do. So when I think of cost of sales, I think of what does it cost you to physically deliver the product or service to the customer? And in this case, to deliver spa services, you have the tech, the person providing the service, right? The cost of that person, their wages, payroll taxes, all of that, that is a part of delivering the service to the client. They also sold products, and so the cost of the product is a physical cost of delivering the product, as opposed to, in their case, they put their payment processing fees in cost of sales because, some people do this because they think, I get charged a percentage of sales, and so therefore it should be cost of sales because it's tied to sales, but it's not. So payment processing fees are not a cost that you incur as part of delivering the service to the customer. It's just a choice. It's a function of what payment processor you choose, which is completely independent of delivering the product or service, right? So it's just things like this that make it really muddy when you look at your cost of sales. And if you have cost of sales, I think it is incredibly important for you to clearly know what your cost of sales are, because you need to know every time I make a sale, how much money am I keeping? Because this is really pivotal to you, to your business success. So their cost of sales was not correct. And then the biggest thing that honestly took me the most time to untangle was they had so many expense accounts. And if you use QuickBooks, you know that, and I think actually most accounting softwares do this, where you have all of your expense accounts and they just alphabetize them. And so I had pages after pages of expense accounts to go through just in alphabetical order, not grouped by theme, not grouped by anything really. And there were so many accounts just for every individual, like for example, in software, they had an account for every software subscription, every vendor that they had. I don't need to see the breakdown. When I open the P&L, I don't need to see a line for every software account, okay? Because it just muddies it, right? It makes it hard to know. And this business owner was doing it where they were getting their P&L and opening it, and you can't answer the question, why did I not make money this month? Because there's just so much going on. After I reordered the accounts, I'm going to tell you what I saw after I did the exercise of fixing the reporting. Number one, I saw that they were not operating near their capacity. And so with this being a physical location, what I want to know is how many appointments can you possibly have in a month? And it's not reasonable to expect you're going to have 100% utilization on a regular basis, but maybe, 90% utilization is a good goal to have. And they were operating more like 60%. Their gross profit percentage, so gross profit is sales minus cost of sales. The percentage is gross profit divided by sales. When I looked up a benchmark for the spa industry as a whole, they were operating at the minimum of the range of what that industry sees. So they had room for improvement in terms of their gross profit percentage, which is a function of pricing and cost of sales. So you can increase your pricing or you can cut your cost of sales to increase your gross profit. I could also see clearly what they were spending money on, what the major buckets were. And in this case, I could see that they had a lot of overhead payroll, meaning in the example of a spa, this is your front office staff, the scheduling people. In this case, they did insurance billing. So they had somebody on staff having to do insurance reimbursements. They had, people like doing all the other things in the day-to-day stuff, right? And then they had other expenses that were not quite as high, but I could clearly see here's how much you're spending on the actual physical store location. Here's how much you're spending on marketing. Here's how much on payroll, and here's how much on your admin expenses. And so after I did this, I could see they were not profitable for those reasons. They weren't operating at capacity. Their gross profit was pretty low, and they had pretty high overhead expenses in some of the buckets. What I want to do in this episode is tell you, I'm going to explain to you what I did to answer those questions, which enables the business owner to make decisions of how can I increase my utilization, how can I increase my gross profit percentage, and how can I manage my expenses better. If you're enjoying my podcast, then you are going to love my exclusive weekly email series, Profit and Prosper Millionaire Mondays. As a business owner, you have limitless potential for the amount of cash flow you can create in your business, but your journey to building wealth might not feel all that straightforward. To convert your cash flow into real wealth, you need to do a bit of planning and strategizing so that you can be wealthy and be well, reaching financial independence and eventually retiring or relaxing early at your lake house, which is my plan. In my Millionaire Mondays email series, I share tactics and strategies for using your business to generate your first $1 million in net worth in the same approachable way that you get in the podcast. Sign up for my exclusive emails for free at profitandprosper.co/millionaire. So what I want to do is explain to you my thought process of what I did to answer those questions to figure out why they weren't profitable and how I reorganized their financials and created a scorecard for them with KPIs so that the business owner could quickly see what is working and what's not. And ultimately, what we worked on together was answering the questions of, okay, you're not operating near capacity. How can you do that? Not at capacity, but closer to 90% utilization every month. What are the ways that you can improve your gross profit percentages? Probably by managing your labor costs, right? We know we need to focus on this area. And let's look through your expenses and see, is there anything we can cut out? Is there anything you can scale back? Is there anything that is not giving you a good ROI? Because answering those 3 questions is going to help them become more profitable. Ultimately, these are the 2 questions that I ask when I am trying to put together a report, a scorecard, and KPIs or key performance indicators that are useful to a client. What are your financial goals? Question number 2 is, how do you know if you are on track or off track to achieving those goals? We'll answer question number 1 with the case study, right? Their goals were, this business owner, she's a mom. She didn't want to have to work a ton in the business, but she loves running it, just didn't necessarily want to have to be in the day-to-day. Totally get that. I'm in the same boat. And ultimately, this business is her path to financial freedom. So what we started with when we set her goals were, how much money do you need from this business to achieve your financial freedom? And that was a combination of how much do you want to sell the business for one day, or how much profit could you generate if you optimize this business and then open a second location? We worked through what are your goals there? And ultimately, the point of that was to get back to a profit target in the business. Because if you want to sell a business, the sales price is going to be based on the profitability. If you want to have money generated to invest in other things, that's also going to come from the profit of the business. So ultimately, we back into a profit target. And then from the profit target, what we looked at was, with one location, what does an optimized profit look like? What is a reasonable capacity for you? What's a reasonable utilization of your appointments that you can target every month? And then if you do that, optimizing your cost of sales, optimizing your expenses, what is a healthy profit that you could generate, right? If you do all these things. So we set goals based on that target. And so the goals that we set were really in line with the areas that I've already mentioned. 1, utilization. So how many appointments are they booking every month? compared to the total available appointments and tracking that as a KPI because that's really important for them to be successful. We also looked at, in this case, getting repeat customers back in the door and ways to do that versus having to get new people every time to achieve that utilization number, because in many cases, it's way easier to get repeat clients back in the door than it is to find new ones. Their other goals were around maintaining a solid gross profit, which they will do by tracking carefully their team's hours. So, you book a massage appointment, a spa appointment, you have your technician, your therapist who actually does the appointment. And so you're tracking how much time are they being paid for in payroll compared to how much time they're actually getting billed out, right? So like how much of their time is actually used on site, not on site, but like in an appointment versus how much they're getting paid for, because you want to make sure you're paying them, you're keeping the non-utilized time. I don't know if I'm using the right word, but like the time outside of the appointments, you want to minimize that, right? With good scheduling, basically, with monitoring and making sure training time is sort of optimized. And they're not going to be at 100% efficiency, but you want to figure out what is a good efficiency for them and track that. And then if they go off track, if you're paying them for a ton of time that is not being used in appointments with clients, then you want to figure out why so you can address whatever the issue is. And then their other goals were just around, what are the expenses we need to maintain this store at this utilization? And let's track that. And if we do have something that pops up, we need to make sure that we are appropriately planning for that with either, using excess sales money or our savings or whatever that is. But knowing what your target expense number is just in a normal month is obviously really important. Then we asked the question, how will you know if you are on track to achieving those goals? So how will we know if we're on track to achieving the profit goal that we set in this business? And again, KPIs that we tracked were, in addition to breaking out their sales by the different buckets, we talked about utilization, right, of their appointments, and we talked about labor hours. So here's what I did to provide better reports so that this CEO of this business can really know their numbers. One was sales buckets. So again, you just heard me say a few minutes ago, this is my pet peeve. So what they had was sales by payment channel, which doesn't tell me anything about what they're selling and what's working. So what we did instead was we got a report out of the system that they used to book all their appointments that showed this was the revenue for, this service versus revenue for this service versus product sales and gift cards, right? We broke it out into the major categories of things that they were selling. And so what we did instead of recording sales by payment channel was we recorded the sales by category. And this is something that some bookkeepers can probably do on their own. If you say, hey, can you do this for me? Some of them might need a little bit of guidance around how to do this because honestly, answering these questions that I've said, what are your goals and how do you know if you're on track? And let's design reports around answering these questions. I think this is really the difference between a bookkeeper and a CFO. And there's some bookkeepers who can do that level of work, but then others who can't. And I know that sometimes that can cause frustration with people when you really need that higher level help, but your bookkeeper doesn't necessarily have the skills in that area. And this is when I remind people that a tactician, like a tactical person, has a different skill set than a strategic person. And that's the difference. A bookkeeper is more of the administrative, tactical person who actually gets the work done. And then the CFO is the one who can answer those big picture strategic questions. And so that's really the difference, right? So if you're listening to me and you're like, oh, I want to have my sales redone, just know your bookkeeper might need a little bit of guidance around doing that. So I recorded their sales in major buckets of categories of, instead of payment channels, we did what they did in massages, what they did in memberships, and then what they did with some of their other services. We also streamlined their services, but that's kind of I don't want to necessarily go into that in this case study. What we streamlined, because when we had redone their financials, we saw pretty clearly there were a couple of services that they offered that no one was buying. They had some where they were billing out to insurance, and they had someone on staff who had to do all of the insurance billing, which is a pain, and it really wasn't making them any money, right? So they decided to streamline their services down into the ones that actually make money, right? And so then we made sure we reflected in their reporting the different categories of things that they were going to focus on, so that when they open up their P&L, they can quickly see, oh, we're doing this much in these things that we care about, right? This is how much we sold in our memberships this month. So we reorganized their sales buckets. We also reorganized all of their expenses. So instead of having like 100 plus expense accounts, what I did is I said, okay, what are the major things you're spending money on in this business? In this case, that was the cost of running the store. So that's things like rent, utilities, supplies, cleaning, laundry, all that sort of stuff, right? The cost of the physical store. Then we had marketing. And in marketing, I like to reflect my accounts. Like I like them to reflect what your major marketing spend is. So like if your marketing strategy relies heavily on ads, like I want to see an account for ads versus an account for your podcast versus an account for if you have PR, things like that. I like to bucket that way so I can see like what are your major things you're spending on in marketing, and let's break it out that way. And so they had their marketing bucket. Then we had their payroll, because they have the front office people, like the schedulers, the person at the front desk, the people who do the laundry, like the stuff, just the back end stuff in the business. And then we had the admin office costs, the other things that have to run a business but aren't necessarily going to fall into the other buckets I've said. So I reorganized all of their accounts into these major buckets so that we can clearly see, okay, if you have $300,000 in gross profit in the month, you spent this much on running the store, you spent this much on your payroll, you spent this much on marketing, and then you can see very easily, oh, our payroll cost popped last month. Why? Versus when I first looked at their financials, it was just every account, 100 accounts listed out in alphabetical order. I cannot see trends that way. There's no way to very quickly answer, where did your money go? So what I did instead was 4 major buckets with sub-accounts under each. And so I can see which bucket is popping in the month or where they cut costs in the month, and we can very quickly answer why. Then I created them a scorecard with KPIs. So KPIs are key performance indicators, and these are really the things that answer the question, how will you know if you are on track to your goals? And you can probably answer some of this from your P&L, but I like to put it in a 1-page scorecard so that when we open up the spreadsheet, we can see the things that really, really matter to this business owner. And then if we need the detail behind that, that's what's in the P&L. So in this case, on their scorecard, what I did was I put their sales by bucket, and I also did them a split so I could see the percentage of sales that came from each bucket. Then I also listed out one line for their cost of sales and their gross profit so we can track their gross margin, because that's really key for them. We track their total expenses, and in this case, I don't go into huge detail with the expenses unless there's something that's really pivotal to them achieving their goals. In this case, there really wasn't. So we look more at total expenses, or maybe like the big 4 buckets, but we don't go into detail on the scorecard. We just want to see the high level numbers. And then of course, overall profits. And then at the bottom of the scorecard, I do some of the metrics that maybe aren't found directly in the P&L, like tracking your utilization and tracking your labor efficiency, because those are the things that answer, are we going to achieve our goals or not? Just revisiting all of this makes me like, it's a lot, right? This business is doing high 6 figures in revenue. And so there are a lot more moving parts to consider when you're looking at this business. So if you're listening to this, I want you to ask yourself, how can I apply this case study to my business? How can I answer the questions, what are my goals in my business, and how will I know if I am on track? How can I answer those 2 questions with my reporting? How can I have my report show me very quickly, is this working or is this not? So that you can then make the decisions to do things like this business owner and increase their utilization, increase their labor efficiency, and manage their expenses to make the business more profitable and help you reach your goals. So what I would suggest for you, if you want to apply any of this to your business, is to go look at your financials and make sure they answer the questions that I've asked. Make sure you can clearly see your sales numbers. You can clearly see the big buckets of expenses that you're spending on. And make yourself a scorecard. Ask yourself, what are the KPIs that I need to track? And, I don't want pages and pages of KPIs. I want like one page of what is really the most important that will help you quickly see if you're on track or off track. If you have a bookkeeper, I would go to them and say, can you help me reorganize this? Or ask them like, hey, I want to see my sales this way. Hopefully they can help you, right? If you're like this business owner where, their bookkeepers are doing a good job at keeping things organized, but not on the reporting side, I have a handful of spaces in my cash flow intensive. I have available 1 to 2 per month. So reach out to me if you are interested in that. Or obviously with any of our CFO clients, we do this on a regular basis. So if you feel like, I'm ready to upgrade from bookkeeping to having a CFO in my business, this is part of what we do. This is a big part of what we do. I actually just recently opened up a handful of availability in my CFO Lite service, which is where we handle your bookkeeping, your tax plan, tax strategy, monthly reporting, and then you get quarterly one-on-ones and office hours with me, your CFO, where we will do exactly this. Figuring out why you're profitable or why you're not, what your goals are, and how we can get you there. So I hope that this was helpful to hear the actual case study of a real life client. And I know from experience, this is a really common issue that people have. And so hopefully hearing my thought process as I go through, like, here's how we change their reporting and here's what I'm looking for when I'm looking at reports as a CFO, hopefully that helps you figure out what you can do in your business. So go and figure out how to apply this to your business, figure out how you can get yourself some KPIs, and I will see you all next week. Thanks for listening to this week's episode. Now, I want you to go take some action. What's one thing you can do this week to create more profit in your business? Send me a DM on Instagram at YoungCoCFO and share your action item with me. If you have a question or topic you'd like me to dive into, or if you're feeling empowered about taking charge of your finances, let's continue the conversation. Go to profitandprosper.co to submit a question or topic for me to talk about on the show. And because we all profit and prosper better with friends, please leave me a review on Apple Podcasts, subscribe wherever you listen, and share the episode. Make sure you tag me at YoungCoCFO on Instagram so I can give you some love, and I'll see you in the next episode.